If you get your insurance through the Colorado Health Co-op, you might be one of 80,000 people who will be without health insurance soon, and you'll be scrambling. But the system was supposed to work. Linda Gorman's with the Independence Institute. She takes care of healthcare issues. If I understand this, and I've got family members, I've got friends who were on this, and this was the best deal through Colorado's very own exchange on healthcare. And now it's gone. First of all, what was it? And then tell me what happened. What was the co-op?
It was a mutual insurance company that relied on government loans and funding to get started. And these were part of the Obamacare legislation, because a lot of the people who supported Obamacare think that profits are really bad, and that if we could just have member-owned health insurers, then prices would be lower because there wouldn't be any nasty profits.
So let me see if I understand this. The idea is we're going to have this exchange. We're going to have all the companies there, maybe Blue Cross and Anthem and United and all these, evil for-profit insurance companies. But we're also going to have a not-for-profit company that doesn't make a profit. Therefore, they'll be able to do it for a lot less. Was that kind of the idea?
That's the idea. That profits are a waste in the economic system, and so you shouldn't have them.
Not a motivator.
Not a motivator, not a signaler, not something that draws more resources in. It's just a waste. But people are entitled to their opinion. What they shouldn't be entitled to is a whole bunch of government money to see if it works or not.
All right, let me see if I got this part. So while Colorado Health is out there trying to attract business through the online exchange, it's not really having a free fight with all these, or free competition with all of its competitors, because this one, the co-op, gets a lot of direct subsidies. Am I getting that one right?
It got $72 million in loans to start.
$72 million in loans. Now,
yes.
Private companies can also get $72 million
yes,
a
they
loan.
can.
Businesses go into debt all the time in order to get going. What's the problem with this company doing the same thing?
There's nothing wrong with them doing the same thing if they have to go through the same process that other companies have to. Starting a small business is hard. Well, starting anything is hard, right? And one of the things you have to do is convince other people to give you their money. And as you're convincing other people to give you their money, they'll make suggestions, they'll call your ideas stupid, they'll tell you where you can improve things, and they'll keep very careful watch over you to make sure that you're not doing something stupid.
Because it's their money.
Because it's their money. The problem with giving something taxpayer money is it creates a false expectation that we can succeed, and it doesn't make people go through this vetting process. And I think that's bad for the people that come in. I think it's like you're luring people to their doom. It's kind of like student loans, where you lure the cello player to take out $125,000 in student loans. And nobody would give that person $125,000 in student loans. They tell them to go work at a restaurant and pay for school and do it over time. So that's what government subsidies do for business startups.
Right. So again, using the way I'm thinking, you've got the co-op here, which is a co-op. Nobody owns it. All the people who buy a policy, they own it. So there's no profit waste of that nasty profit, and they have to compete with everybody else here. These people get loans from the government, whereas all these other people don't get loans, or if there are loans throughout whatever they do, they have to go to the private institutions, they have to go to banks,
correct.
They have to do all that
yes.
other good stuff. And those are kept, so it would seem to me, if their logic's right, this co-op having all that excess revenue because they don't have to pay their shareholders, there's no profit, and by having free access to that credit, they would do really well. And I can understand why they would have the lower price when you went on to the exchange, and that lots of people I know took the Colorado Health Co-op prices because they were the best prices. And also, many of them got another subsidy to buy it, right?
Yes, but that's separate, because you would get the same subsidy no matter. As long as you buy through the exchange, you get the subsidy. That's an income-based subsidy, so that's
right.
that's
so in other words, if you don't make enough money, you could get a subsidy, but you could use it anywhere. But
right.
I'm getting my subsidies confused. Sorry.
Yes, you are. There's so many in Obamacare that it's hard to keep them straight.
What happened? Why are 80,000 Coloradans who were so excited to get this discounted insurance, what they thought was reasonable, now they're out of luck?
The reason is that the state has financial requirements on insurance companies, which actually is a regulation that somewhat makes sense because typically when you buy insurance, you're paying money now and they're promising to make good your losses later. And so the reason we have regulation is to make sure that they have enough cash to make good on their contractual claims. And what happens?
An example of that would be
life insurance.
Life insurance. That, yeah, give me $1,000 a year, and when you die, we're going to give your family $1 million.
Right.
And if they're not saving the money,
if the funds are all in Brazil, you're
right,
not going to get your money
back. It's not going to happen.
Right.
And it'll be too late. So
right.
the idea of regulation is show me the books and make sure that there is enough there to cover your liabilities.
Right. Your expected liabilities. And they didn't have enough to cover their expected liabilities. They lost $23 million last year. And they
lost how much?
$23 million in 2014.
But they didn't have profits. They got to save all that money from
profits. But you
profits.
can still have losses even if you don't have profit. In fact, you typically always have losses if you don't have any profits. But that, we digress, right?
We digress.
So they had a cost to premium ratio that was really high, and in fact was so high, it was about 1.3, that normal insurers in the business would go, this is not financially sustainable, you need to do something.
Ratio?
Cost to premium ratio. So costs are your costs, your claims costs, your administrative costs, and premiums are how much money you're taking in. And they should be, your costs should be less than your premiums if you're going to make a profit or have enough to distribute to your members or whatever you're doing. But if your costs are quite a bit higher than your premiums, then long term you're going to have a big problem. And the Division of Insurance has been watching this company for some time and concluded that it didn't have enough money to make good on its promises, and they shut them down. And that must be hard, but it prevents worse losses later.
What do you mean? Because people are out of their insurance. They're going to have to spend a lot more money now going with a solvent company.
Right.
They're being hurt now.
Yes, but they would be hurt more later if there wasn't any money to pay their claims. You go and you run up $100,000 in hospital bills, and your insurer goes, oh, gee, sorry, we don't have any money to pay your claim. The hospital comes after you. So personally, I'd rather look for new insurance than have to face the fact that they've taken my money and not going to pay for my medical expenses.
But hearing what we're hearing, the problem is that they didn't get the government money that was promised to them. So I think the argument goes like this. That's all wonderful what you said, but we built our projections on getting X amount of dollars from the government, from the feds. That money didn't come. Therefore, it's not fair that we go under because we were banking on this free money coming from the feds. Do I have that basically right?
That's what I call that the silly spin. There have been two kinds of silly spin out there. One is that the co-ops have been great for the insurance market because they've kept premiums down. Well, yeah, I can always keep premiums down if I spend all my capital and then go bankrupt. That doesn't help anybody. It keeps premiums down, though. And the second one is we failed because we didn't get enough government subsidy. And the subsidies that they're talking about are something called a risk corridor payment, which is basically socialization of profits.
Risk corridor payment.
And they were
Help me out.
Yes. Okay. Here's a risk corridor payment. The idea was that these are all new companies, and this applies to every company in the exchange, not just the co-ops. All right. So all insurers face this if they sold policies through the exchange. And the idea was we don't know what your losses are going to be because this is all new and you have to do guaranteed issue and everything. So we, the government, are here to help. And so they said when you file your insurance plan, you have to estimate what your premiums are going to be. And if your what your claims have to be, and then you estimate your premiums. And if your actual claims are greater than the claims that you expected, and they're 3% larger, then we, your helpful federal government, will make up for 50% of your losses.
Wow.
Yes. But if, there's another side.
There's another part.
If, on the other hand, you were a very good business person and your expected claims were higher than your actual claims, so you made money, you made more than 3%, the government takes 50% of that.
Well, all right, I get this. They're hedging bets. The idea is that co-ops that do it right and make some money
Any insurer,
will pay back for the ones that don't. Any insurer, or just co-ops?
Any insurer that was in the exchange. This only applies to the exchange because they wanted to attract insurers into the exchange. So they said, we'll socialize your losses and we'll socialize your profits.
And so what went wrong?
Well, think about it. If you're an insurer, what are the incentives like? If you make money, they take it away from you. But if you lose money, they give you money. So what would you think would happen to the claims for the risk corridor payments? Well, it turns out they had like almost $3 billion in claimed losses from the insurers and about $300 million in claimed profits by the insurers. So basically what happened is that every insurer in the exchange market somehow
lost money in order to get free money.
I don't know what their thinking was, but
so
obviously you can't make good on this.
The idea of that revenue sharing, we'll call it that way, is that for those that make, we're going to take half. Those that lose, we're going to give half, and it's all going to wash out. You're telling me it didn't balance out.
No, I'm telling you rewarded businesses that were bad at predicting what their claims were going to be, and you penalized businesses that were good at predicting what their claims were going to be. And so you got a whole bunch of losses. It's not rocket science. It's bad incentives.
Did the Department of Insurance do the right thing, closing them down? Was it this, or did they even have a choice? The
two things are the same. I mean, they could have, I suppose, said, well, we'll give you a little bit more time or something like that. But this is the 8th or the 7th, or the 8 co-ops have failed out of 23. So by now we're probably starting to get an idea that maybe this isn't the greatest business model that anybody's ever come up with. And the Division of Insurance has a responsibility to protect consumers by, not allowing companies that can't meet their financial requirements to stay in business.
Minute left. What happens to these 80,000 Coloradans, many whom I know and love, are going, my insurance got canceled. I thought I could keep my doctor and my insurance policy. It's getting canceled, and now I'm going to have to go back. What happens to them? What do they need to do?
Well, first they need to work on getting rid of Obamacare, because that law is the reason your insurance premiums have gone up. That's a long-term project, though. The short-term project is you have to decide whether you're going to pay the penalty for not having insurance or pay much higher insurance premiums. If your income's under 400% of the federal poverty level, you can go through the exchange and get subsidies. If your income is higher than 400% of the federal poverty level, you're just going to have to go to a broker and find another policy and pay a whole lot more.
You say 4 times the poverty level. Give me a number. How much does somebody make?
For a single person, roughly $45,000 a year.
All right. So basically, you're SOL, and you can thank Obamacare.
Pay more, yes.
Pay more. The answer is pay more and pay for somebody else. Linda, thank you. Listen for me on KHOW Radio. Check out the Independence Institute. That's independenceinstitute.org. And we'll see you next week.